Rusty Nails out of town. I think he's on a speaking gig. But in the meantime, even better, I've got Brent Wilsey. I think we're all happy about that. Brent, good to have you, man.
Oh, good to be here. I do miss Rusty though.
I don't miss him at all. Our life is better with you and not him. Okay, couple of things happened over the last couple of days. I'm going to talk about. Dollar hit a 4-year high against major currencies. Now, a lot of people don't understand why I care about a devalued dollar, but we should care about it. Let's talk a little bit about that.
Sure. And everybody gets excited, like, oh, they beat their chest, like, yeah, the strong dollar and so forth. And while it feels good and patriotic, we have to realize that when the dollar goes up in value, our exports become more expensive, and therefore imports are a better deal. So what people will do, just because they're going to go for the lower price thing, is they'll buy more imports. Our exports go down, therefore manufacturing plants don't manufacture as much here in the United States because it's not being exported and not being bought, and it slows down the economy. So a strong dollar is not that good.
I would say most Americans, no matter what their vocation, don't really, are totally ignorant of the current plight of the U.S. dollar in relation to the euro. I mean, in short, do you believe that there's a dollar crisis in the world economy right now? Or do you think we're past that?
Dollar crisis, you mean?
Well, I mean the devaluation of the dollar.
Oh, no.
You think we're in better shape now than we were, say, 3, 4, 5 years ago?
Oh, definitely. And again, I've never been concerned about the dollar. I was happy about the dollar. In a basket of a difficult economy, our dollar did go down like many currencies did.
Right.
However, we're always when there was trouble in the world, where did people go? They went to our dollar. And what's happening now with the increases in interest rates, potential increase in interest rates, the stronger economy, people are saying, hey, let's buy U.S. dollar.
So how does one protect one's assets with a declining dollar or with a strengthening dollar? Is there a way to do that, or do you just ignore that metric and sort of keep your head down on a buy and hold approach?
I hate to say I put my head down. It doesn't sound very good.
No, but I'm talking, as in nose to the grindstone.
I mean, you look at what you're buying in the portfolio, and are you buying companies that are globally, situated and so forth? There's not a whole lot you can do about it. It's kind of like energy. We own oil companies right now. They're down because energy is down. That's going to happen. That's part of investing. So while I don't like the dollar going up in value, it's going to hurt us short term. You have to realize this is part of the longer business cycle that we go through.
Now, one thing that it's important to understand, and I hope that people, this doesn't get lost on people, but the U.S. dollar is the world trading currency, which means that all goods and services are priced in U.S. dollars. So with the U.S. dollar devaluation or U.S. dollar increase, the impact, as you said, on international trade is tremendous. And I think that's something that maybe the individual investor doesn't need to study, but it's good to have his eye on the ball, don't you think?
It's good to understand the concept. It's kind of like your car. You know how your car works and so forth. You don't have to fix it. Same thing here. You have to realize that the dollar, it is important. When it goes up in value, it's going to hurt us, our economy. The world trades on the dollar. It's great to have, again, I call it the chest-beating pride of, yes, the dollar's strong, but we got to be careful because it can come back and hurt us.
Well, no, and while we're on the subject, by the way, Brent Wilsey here, Brent Wilsey Asset Management, of course, one of the smartest guys in investing that we know. And, of course, if you visit his website, wilseyassetmanagement.com, there's lots of resources there for you. You can get a hold of him. You can listen to his radio program. You can see a lot of hits here on our show here. But the one thing I have to talk about is this commodity. I guess I'm going to call it a not a theory, but maybe a philosophy that gold is the protectionary measure. Which I just am not convinced that gold is a great hedge against anything.
As I always say, gold looks great on your wife, girlfriend. Hopefully you don't have them both. They're going to get you in trouble. But as an investment, you don't know what the true value is. It's only what the next person will pay. Is a hedge against inflation? I don't believe so. I've never bought gold, will never buy gold because I just can't understand it. It is not a good hedge against inflation. I mean, it just doesn't work. I'd rather buy a company that can raise their prices of their products and pay me dividends, and I can see their earnings go up.
It's almost a house is a better hedge against inflation than gold is. Because speaking of housing, a little shakeup with respect to the Case-Shiller. So the big city home price is still below where we were when we were during the bubble. But is that of concern, or does that mean that real estate's taking a more conservative growth curve now?
What's actually happened here is that we had some very strong housing numbers a couple years ago as investors came in paying cash for houses. They were actually buying up these houses for a low price, and they just flooded the market with cash. Well, now we're back to reality to where they're done. There's not those great deals out there. Still, I think a house is a good buy. but now the true investors coming back in, and they're a little bit slower coming back into the market. And I think the housing will be fine. I mean, year over year, the case shows that housing is up, 7% year over year, which is not a bad growth on a house. I mean, people think they should go up 20%. No, I mean, average appreciation over years is like 4%.
Right.
So we get these high expectations, and reality sets in, and we get disappointed.
What's interesting, you remember how Las Vegas had was the biggest residential boom during the I guess the bubble for real estate. Still, Las Vegas is still 45% below what it was during its peak.
Wow.
Which is amazing. You look at Phoenix is 35% below its peak. San Francisco, one of the most notorious expensive real estate areas of the country, is down 10%. So thankfully here in Southern California where we're based, I think we're doing actually pretty good. I think we were up last year 8% here in San Diego County.
Yeah.
We'll see, but you can't count on that. That's
well, and I think real estate will be fine. I mean, now that when I looked at the inventory levels, and actually the existing home sales weren't very good, but last week we had new home sales came out, and they were very good.
Yeah.
There was actually a shortage. I think the inventory fell to 4.6 months, so there are people out there buying.
Not to be confused with first-time buyers either. This is home sales.
Right.
Hey, so there was a great piece of economic news that came out yesterday, and that's with respect to personal income. You want to talk about that a little bit, because I think that's important. I think that we always gloss over these consumer confidence numbers. I think we gloss over a lot of those metrics that the guys in the suits on the business talk shows do. But this is important stuff. This is good news because it directly affects our GDP.
Right. And we try to talk about not just the numbers, but why this is important. And again, let's just give you the numbers. Personal income rose 0.3%. Year over year is up 4.3%. And spending last month was up 0.5%. In the month of August, year over year is up 4.1%. Now, why is this so important? I mean, you think about it, if your income's up and you're spending more, that's more money going into the economy. And again, a 4% increase in spending or in income is not going to set the world on fire, but it is going to keep the economy moving along. So as people make more money, they're spending more money, and the economy is doing well. And that's why people say, oh, we're going to go back to a Great Recession and so forth. We're not. We've got some good, solid numbers, like good income numbers and good spending numbers that keep the economy going forward.
Speaking of metrics that none of us understand, talk to us about the Chicago PMI, because we hear about that, and I think, including myself, I gloss over that when I see it, so I don't really understand what it means. So what does it actually mean?
Well, breaking it down, you have the Chicago PMI, which is a manufacturing number, and it's in the Midwest, so it shows how the Midwest is manufacturing. Okay. And very simple, the number's up, it's good. If the number's down, well, manufacturing slowing down. A number below 50 is a contraction. Anything above 50 is positive, that we're expanding. Now, the number did fall.
So what are we at 60? We're at 60 now? 62?
Yeah, it came at 60.5. It did fall from last month, 64.3. But, manufacturing, it's not a perfect science where every month is going to go up a little bit. You manufacture stuff. And, again, we have to realize that in August, September, and so forth, a lot of the Christmas stuff is already manufactured. So they're 3-4 months ahead. So we could see a slowdown in that. We had the airlines, the big Boeing thing. So the number does move, and 1 month does make a trend. We got to look about 2 to 3 months to see what's going on.
Yeah. Another interesting part of this thing is we were talking about personal income and outlays on the positive side, but consumer confidence was I guess, a disappointment, would you say, or was it just not what we expected?
Yeah, I got to say it's a disappointment, and I was kind of shocked. And again, 1 month doesn't make a trend, so I'm not like, oh my gosh, got to sell everything here. But it came down a lot. It's like 93.4, came in at 86. And what I saw...
Is that a misread, possibly? Is that could be just a funky month? Or was it, could summer have something to do with that?
Yeah, these are statistics, and they're not going to be perfect numbers. It's not going to go out and interview every single person. Sure. So that's why I have to look at these numbers over a longer period to see how they're going. What I saw in the report was the biggest drag was current conditions. People just aren't doing quite as well. They also are concerned that, going forward, maybe I won't buy that home. Maybe I won't find those autos. And these are boxes that a statistical sample will check. So it's not everybody, so it could be off that way a little bit. Mm-hmm. But I did see, however, that inventories were building, which was a positive, and they say the demand is high there. And we got to realize, energy, gas prices are way down. That will have a benefit going forward. And what I do see happening, we're getting close to the holiday season. I was in Costco yesterday, saw Christmas trees. I'm thinking, wow.
It's around the corner. We're here.
Yeah, we're here. And people feel good in the holiday season. I saw a report this morning. I believe the number was we've never had, I think in the history there's only been 4 negative quarters in the fourth quarter.
Well, this is good news. Right? When we have you on later in the week, I also want to talk about the eBay, PayPal deal as well. Brent Wilsey, WilseyAssetManagement.com. Thank you, Brent. Appreciate it.
You're welcome.